classic descending triangle completes and provides reference for future resistance. The strong break is apparent without volume on the chart, since there are rows of continuous red candles strongly closing lower. It is not unusual for the market to veer back towards a pattern after it has completed. This is seen with the minor upswing towards the triangle's base. This can also be seen with upswings back to head and shoulders patterns, triple and double tops. It also happens with bullish patterns, except they would be downswings back to a key range, such as a double bottom. In this case, the downtrend is so strong, the minor upswing doesn't make it back up for direct contact with the triangle's base. It is a similar sign of bearish strength to when a gap down doesn't immediately get filled. A clear frame for another potential descending triangle has emerged. Now close attention will be paid to how strong the trend line resists some short-term bullish spikes near the end of the triangle. Although it is turning out to be a strong bullish reversal, there is considerable opposition from the completed descending triangle's base. The second descending triangle did not complete due to bullish sentiment into March. That broke over the downtrend line. This created a reverse head and shoulders that provided a helpful uptrend line that countered a bearish reversal in April. Interestingly, the failed descending triangle's trend line became the neckline of the reverse head and shoulders, and would have been helpful in analyzing the early April upswing, if it would have been adjusted slightly higher to line up with the highest points of the downswings. A pair of double top reversals break the uptrend line and lead to a further drop that lands close to the area of the steeper variation of the downtrend line from the reverse head and shoulders neckline. Small triple top from September to October, prior to the recent bullish surge. That is likely to return back to the range formed by the pair of double tops seen earlier. The triple top could be classified as a head and shoulders due to the slightly higher middle downswing, though like other examples it is a small difference that is not significant for this example. More experienced market participants would have been able to notice the triple top / head and shoulders took place within a gradual upward slope that forms an ascending triangle outline. The resistance range was directly from what was the support range of the completed descending triangle. Amazingly, the upward trend line from the reverse head and shoulders still has an impact. During the beginning of a recent range, that continued a less strict double top starting 2018. This led to firm support being broken towards July. Just like before, there will be close attention paid to short-term bullish spikes against the descending trend line, as trading draws closer to the end of a possible descending triangle. Technically, the trend line was surpassed to classify this as a failed descending triangle, but bearish sentiment quickly returns with a pair of double tops in a volatile range. The range is full of sharp price fluctuations as seen with the large candles, so it is more of a flat top with double top characteristics in the rough M shape. In any case, attention returns to the downtrend line, offering moderate support to the recent bearish acceleration. Naturally, there is strong support at the base of the failed descending triangle. Overall, the frame of the failed descending triangle still had residual influence as a major range of support and later resistance. A new descending triangle outline can be formed, but the upswings in later 2019 and the downswings into 2020 would have to be included. That would result in an overly large outline that is less effective. Interestingly, there was a small descending triangle that completed successfully right under the large failed descending triangle's base. The failed descending triangle's base was overcome relatively easily due to the strong uptrend that had 2 stable upward channels. This entire case study provided great examples of clear chart patterns that could still be analyzed clearly without the benefit of volume on the chart. Price action and candle reading at key levels and ranges was more than adequate in gauging the strength of reversals, continuations, and breakouts.